Good evening. This is the Elliott Wave Daily Update for the S&P 500 and the NASDAQ 100 for Monday, December 2nd, 2024. And I'm going to try to keep this at a decent time frame. So I'm going to begin with the S&P. I'm on the hourly chart, and you're going to see some additional detail showing up here. And that is for a reason so that you can get and have a better understanding that there is a methodology to my madness, and that what I'm showing is an alternate and a preferred. So the alternate I've marked, and with these are resistance points. So I will begin with the preferred. And the preferred count, I have marked the low at November the 19th as minute wave 4. They're under the preferred count, that would suggest that we are in that minute fifth wave going up. And right now, as difficult as it is, it's still a little bit too early to determine if it's not putting in a diagonal, a very out of shape diagonal, but still possibly just a diagonal triangle moving itself up, or is it going to be a little bit more complicated in terms of the A, B, and the C that it puts in into forms of wave 2, which was a running 2, but I'm leaving it as my preferred count, which has been in place for a while, that we should go up and start testing, basis the cash market, 60.55, which is the collar. And now we're in the month of December. And so historically, or whatever you want to put it, it does seem that as we close in on the expiration date for that collar, that it seems to involve the collar itself. So in other words, it's like the level that the call side of the collar is on is at 6,055. I do believe it's going to be challenged. Been talking about it for a while. Doesn't mean that they're going to knock JP Morgan out of the water. That's not going to happen. But if they challenge, it just produces some different types of trading. We might see additional volatility if the market goes up there. We might see something switch and move it out. So in other words, taking it and moving it into a different place for the last 2 weeks, right? Expires on December the 31st. So they just got to deal with it until then. So, and being that I believe that JP Morgan are pretty stealth traders, I don't think it's going to affect them. How does it affect us as day traders and just even position traders, et cetera? I think it can add some additional levels of volatility to the options and to just the way that the market itself moves, the way the index moves. So today and then over the weekend, right? So again, we had Globex on Thursday, coming into Friday morning. We had a half a day on Friday, and then no Globex until we reopened on Sunday. So we had a lot to kind of go over and to catch up with coming into today. The market did manage to pull off a rally, but it was more based on what was happening in the NASDAQ than was happening in other equity markets, such as the Dow or even the Russell. The Russell by the end contributed more to the stability of staying at the higher end of its trading range. Now, what has it done in terms of the Elliott? In terms of Elliott, again, I got the two things. In our preferred count, I'm looking for 5 waves of minuet degree, which are the purple or the color or the shade of purple. And those are for the minuet degree. The minute are in the white. And the gold are the sub-minuet. So it's a level below what I'm counting here. So again, in the preferred, we're counting as minute wave 4 is complete, and we're moving forward and upward in a minute fifth wave to finish the minor wave 5, and then in turn the intermediate wave 3. And then we would drop into an intermediate fourth wave. Now, again, putting this into a perspective in terms of time, there is a lot of talk that the people are now getting more, yep, we're accepting the market's going to do a 20% correction or up to or some version of, but most traders and other firms and everything, we're all looking for the market to do something in terms of correcting. And now I have 2 versions of what that correction may show up as. And in the preferred count, it's going to go above these levels here, 61, 61.28, and it's likely going to end up at the upper end. So 61.76 to 61.90 or 6240 to 6275. We have some outliers up here at the 6400 level. I cannot rule them out, but they're not first on my list, obviously. So again, we're looking towards year end. I think no matter what, if we make it moving higher all the way through year end, then of course the inevitable should then kick off 2025, and that would be a correction. And before we again turn and go back up again to new all-time highs. And now that would kind of fill, I think, a lot of 2025. So what I'm looking for here is the completion point of not only the minute wave 5, but the minor wave 5, which is gold, and I'd have to take this out to show you. And then we have the intermediate degree, which takes us back to this intermediate wave 3 began in no, I'm to think. I think it was 2023. Let me just take this out real quick. Sorry for the break in thought. So this actually, yes, this was December of 2022 is where we began this intermediate third wave. And I'm looking for it to complete. So going back down to that hourly chart, those are up here. That's this yellow way up into this area. And here's the minor. So the minor wave 4 began off the August lows. Excuse me, the minor wave 5 began off of the August lows of this year. So those are our levels. But right now I'm thinking, yeah, we could go these by the end of December. We could. I'm not going to disqualify them based on anything. Or that rolls, and this is what we begin the year. They give it a good push right at the beginning of the year. So in any case, right now, I am looking for, here's our levels. We're looking for the completion of this minuet wave 3 and the minuet wave 3 of minute wave 5. So first resistance is at 6073.75 or 6074. And then these are related to the alternate. I'm going to go over that in a minute. So beyond that, these would not qualify within this move. If we break strongly above 6,074, 75, then we're likely heading up to into this area here. This would be the next fib level, is at 6176. And again, we're in uncharted water up here. So it would be very easy if the market picked up some steam and the buyers were strong enough that it would push it and could take it all the way up. And then again, here we have the minute wave 5. So I would think that if we got to here in wave 3, we got a 4 and a 5, that still is valid. But then again, we need to add that we're going to get above 6,200. But that's to come. Now that's the preferred count. So initially tomorrow, if we get up to this level and we complete minuet wave 3, then I'm looking for a minuet fourth wave, which brings us back down. I do think within that, just some very quick eyeballing, it looks like we probably should hold above 6,000 in a small 4 and then run up again, putting in additional new all-time highs, but likely ending up towards here, maybe even here. All right, let's take a quick look at this alternate. Now, I've said that what these two represent, these two fib lines represent, are the fib levels for an irregular minuet wave B of minute wave 4. Well, there's a minute wave 4. So what does the irregular suggest? That this ABC is minuet wave A of minute wave 4, and this is a B wave. So that's A, B, and we're in a C wave, and it's also coming out in 5, also being close to finishing its third. So we look for a 4 and a 5 for even the C wave. So we have that chance of, first of all, getting up closer to 6,100, but then dropping. And then again, if it went through there, we'd be looking for it again in the alternate. And this is a C wave coming up. We're finishing up 3, we have a 4, and it's going to go up in a 5. And those are the levels, 61 to 61.29, 61.30. That would continue to suggest then, if that's the minuet wave B of minute wave 4, that we come down in a C wave of that minute wave 4. And here's your tags. 58.50 down to 58.23, 25, up into this area. We come flying back down quickly and then run back up again, right, in that minute wave 5 to complete intermediate wave 3. That's what the alternate suggests. The preferred suggests we're finishing that intermediate third wave now. Okay, so that's the S&P. And pull it out to the daily. It's going to get a little congested, but I think I should be able to get inside there and look at the moving averages, and I can. And they're still very much in alignment to go up on the daily. The daily suggests and continues to support higher levels. All right, let's go back to the hourly chart and go over and take a look at the NASDAQ. It's the same deal. I'm laying out more information, and because you see gold and you see gold again, and it depends on which count we're looking at. So here I am on the hourly, and here we have basically off of the minute wave 3. I've got it marked pretty much in the same manner in which this could be a C of minuet wave A, and we're in a minuet B wave. There it is right there. Or the preferred account, which I'm looking at, is that, again, this was 4, and it's 1, 2, and we're working through a third wave. Minuet wave 3. There's minuet 1 and 2 of that minute fifth wave. So that's still my preferred. I'm going to go over this alternate in just a moment. So here we are on the hourly chart. I'm going to look at this and to where we are. If this is the 4 here on the 19th, November the 19th, the low on the 19th completed minute wave 4, and we are rising in a minute fifth wave. That fifth wave is taking a lot of different forms. One of them that actually does still hold very true would be that it is forming a diagonal. That minute wave 5 is forming a diagonal. And out of that, we likely can maybe think we have 1 and then 2, and then it's A, B, C for 3. And here we got fibs coming in right in here. So today, I thought for sure that I thought we would at least get up to around to the 70 level, like 21,270. And our high today was 21,259, almost 60. So I think we got to leave open that we still have the potential and the strength to push up to, say, for example, 21,283, 275, 283, somewhere in there. I think that, and then again, what this would be is a small fourth wave, and I'll bring it down. So let's take it down just quickly to take a look, because we have a lot of sub-minuet levels, both for the preferred count. So this would be in the preferred count, and just bringing this in. This is still 1, 2, 3, 4, 5 of minuet 3. So 1, 2, and then we have 1, 2, and then 1, 2, 3, 4, 5, 3, 4, 5. So to finish the minute. So again, on the 15-minute level, this inside, it's a small fourth wave of minuet wave 3, which is still underway. There it is. We bring it over. Now, minuet wave 3, should the rally, basically this could be A, B, C, and then we'd at least look for it to come back to the area of the lows this afternoon, and that was like 21,176, and then maybe even down 302 would be perfect. That comes in with the 15-minute 50, so 21,137 down to 21,133.34. That should be some nice support. And to finish this, and then again, turn the market higher. We're going to turn it higher in wave 5 of minuet wave 3. There's the 3. Let me just move it over. So this is where it's all going to come in. But then our alternate suggests that we are finishing up a minuet B wave. That's why they're the same color. Going back to the preferred, which would be the third, that we come back down, we get down to maybe even that low, come back up, and we top out basically above, but 21,283 on a real strong push, 21,500, 495, 500, and that would be 3. And then we're going to come down again in a 4. and then go back up in a 5. Remember Elliott stepping stones. So when we're done with minuet wave 4, we have, minuet wave 3, we have a minuet wave 4, then a minuet wave 5, and we are still looking for minuet wave 5 to complete, minute wave 5 to complete the minor wave 5 to complete the intermediate wave 3. Now, those levels remain 2165 to 21,713, and we have them higher at 23,000. So we have very little at 22,000. So again, could this be like, wow, we're going for the outer reaches of our trading sphere, so to speak, these levels? Is it possible? Sure. All things are possible. Whether it happens in the intermediate wave 3, or these are going to be the holdouts and likely come back into play and an intermediate 5th wave up. And that I don't expect until next year anyway. So keeping it more into the short term and what we have moving into the end of the year, we still have all that posturing yet to do. So we're seeing stuff move in and out. We're seeing that they will put a nice rally into NVIDIA, then they take it away, and then it comes back down. One day they really like Apple, the next day they're moving money out of Apple to shift it somewhere else, so just to change positions. So that's the process. And my preferred count continues to suggest that we are going to get up to new all-time highs. Right now, that's 343 or somewhere in there. And I'm looking for it to break above that level. For sure, I'm looking for it to break above that level. So again, and once that occurs, it's going to give us a little bit stronger feel for where, if this minuet wave 3 is still in gear, then we'd be looking for it to stop somewhere in between at 21,495. Again, we got a lot of space in there, never been up here, but we do have some fibs that still could be associated with that 3rd wave. And then come back down and go back up in a 5th. And that would be a minuet wave 5 to complete the minute wave 5, to complete the minor wave 5, to complete the intermediate wave 3. So we're going up there. So whatever happens, the correction coming out of all this should be fairly decent. Now, what about the alternate for the NASDAQ, which is the same as the alternate in the S&P, where what we have is ABC, and that's just minuet wave A of minute wave 4. So it takes that minute wave 4 and pushes it out here. Now, and we have fibs to go along with that, and I took them off of this chart. Okay. So we move the 4 out. This is the alternate. So this becomes wave A, and we're in a B wave. And here are the same, because it's a minuet B, and those are in that purplish color. So in that case, we continue to have the same ones here. But I think what we're coming up with, it's going to be A, it's going to be B, and then we're in the C of minuet. And that comes out through, that finds its resistance at 21,255. So it gets us up a little bit higher. And then because we really don't necessarily want to go above 21,340, that would keep it extremely flat, right? If it's an A B comes in just below it, right, at 55, maybe even 283, could get as close, but come back down. Then we'd be looking for a nice flat. So in other words, if it's the alternate and the minute 4th wave is still in progress, and we're finishing the wave C coming up to these highs, and we basically stay below that 21,343 high that we saw back here, then on the November the 11th, then we're likely going to come swinging back down and get back down towards this low, 20,389, and then rally all over again. So the preferred count is that we're already in that finishing rally. The alternate count says, nope, we got one more leg down, and then we're going to go do it all again. 2024, 2025 type of time frame. My preferred is that we're already in minute wave 5. All right, let's take a look here at these moving averages and see what they look like on the daily. Again, pretty good. they get a little futzy in here. The NASDAQ can and normally will. But do you see they've all stayed in alignment? There's the 8, there's the 20, there's the 50, there's the 200. 200 looks very, very tired. The 50 is still like turning back up as it should, along with the 20, and the 8 is also turning, but we're not that far away. So it's not going to take much to turn these things and turn it negative if we start tumbling back down. And I mean tumbling back down out of small fours, out of all this, and just start to break, coming down out of 20,000. So that's what I think we'd have to see to put more emphasis on the fact like, oh, intermediate wave 3 is done, and we're dropping in the intermediate fourth wave, which would take us much further and take it back out towards the August lows. All right, that's going to be it for today. Let me just take a quick look at the numbers because we are now done with holidays until Christmas. So let's take a look at what we have coming in numbers tomorrow. We have job openings and auto sales, and everything else is Fed people. They're out talking it up for the end of the year. Tomorrow a little bit light. Wednesday, ADP employment, S&P U.S. services, PMI, ISM services, factory orders. Jerome Powell will be speaking, and the Fed Beige Book will be released. All right, so that takes care of this for today. Our next update will be on Tuesday, December the 3rd.